We've looked at this chart many times in the past, but it's looking at US prices in the white for hot rolled coil relative to the blue line, which is North Europe, and the orange line, which is China. Certainly there's been convergence in the prices between US prices and foreign markets, and that probably adds a little bit of stability or causes prices to decline at a slower pace. But worth noting, you can see it very, very slightly down there in the bottom right corner, given the fact that Europe is having its own economic issues, given the fact that China still hasn't really reemerged fully from its zero COVID policies, they continue to creep lower. And what that ultimately does is, all things being equal, it resets the global price of steel lower and lower. So where do we find a home? Well, one of the metrics we tend to use, or I tend to use here at Ryerson, is, well, let's look at the cost of making steel within North America. Similar to that aluminum chart, it's kind of trying to back into, well, where do we start to get to a point where steel mills don't want to make anymore? Well, right now, what's interesting is, and I need to be very clear in this. This is not investment advice. This is not buy-side advice on steel, but it is worth noting that when you take the metric of scrap, which scrap is one of the main raw ingredients to an electric arc furnace, and you add on $300, which I'm estimating to be their margin to cover energy, labor, other alloying elements, and their own margin. If you take busheling scrap plus $300 and compare it to the current futures market, the US hot roll coil futures market is actually at a discount to that cost structure. So that's not necessarily we are at a bottom. It could mean we are nearing a bottom. It could mean we're getting into a fair value type process. But certainly we're digging into an area where I would guess behind the scenes at the steel mill level, they're starting to have conversations, or maybe they've been having conversations of, what do we do to slow the decline? What do we do to better balance supply demand conditions and put a little bit of a floor in prices? What's interesting is I showed this chart last month, and when I showed the chart last month, I put in this trend line, which is the two white bars, to basically show the trajectory to which capacity utilization at the steel mill level was trending, because that was ultimately the trend at the time. Fast forward a month later, you can see that very quickly, and maybe this is the steel mills having these discussions behind the scenes to say, stop the bleeding, start reining in production. And you can see that very quickly, production capacity utilization at steel mills is moving lower at a fairly rapid rate. So what does that mean? That means that they're trying to do their best to better balance supply demand conditions, is how I read it. And so you take that into consideration in combination with the fact that scrap prices are beginning to stabilize a bit in and around these levels. Maybe we are going to begin to see a little bit of a troughing effect in the coming months in steel. Again, not buy-side advice. We're just trying to watch the indicators as closely as we can. But it is worth noting that the pace of these declines in production have sped up over the last 30 days. Talking about the steel plate side of things, it's amazing because I continue to think it's going to come materially lower in a fairly quick fashion. It continues to levitate. I was talking to my analyst about this just a couple hours ago, and he said, why in the world would steel plate be so much more elevated? It's at $1,000 premium roughly to hot roll coil. You make plate in basically the same way you make carbon sheet. And it is true, you do. All the raw ingredients that go into steel plate are basically the same as steel sheet. The difference is a couple fold. One is there's lower volume within plate. So perhaps the ability to have fewer players maybe controlling a larger piece of that market is possible. There is a possibility that certain end markets, maybe the infrastructure bill, some of these government funded projects are putting a little bit of a better bid into the plate market for construction, road repair, things like that. Some of those things are very valid. And maybe we do perhaps see this spread continue. I tend to think, though, again, clear heads prevail. This spread looks pretty exorbitant to me. If the raw materials to make both are mostly the same, I tend to think this arbitrage closes up, because unlike what we're seeing on the carbon sheet side, where steel mills may be reining in production capacity, every single plate mill and their brother should be making every bit of plate they can right now, because they can do so very, very profitably relative to making sheet at this time.